Hey everyone, welcome back to my channel. My name is Jonathan Cabrera. I'm your friendly neighborhood real estate expert. And today I'm talking to you, the buyers, and what you can do with your tax return. That's why I have this whiteboard with me and we're breaking things down. With tax season upon us, a lot of you guys are either have already filed for your taxes, are going to be filing for your taxes soon. Um, you know, don't really know what you want to do with that money. Maybe you want to pay off some bills. Maybe you may want to purchase your first home, right? Be it whether it's a condo, co-op, or a house. In this show today, I want to actually give you guys some numbers on and show you really how simple, and I kind of mean, I don't want to say I mean it lightly, but I don't want to put some heavy emphasis on how simple it is. I just want to show you guys really how you can use your tax return that you're going to get along with what you may or may not have already saved in order to get that home. So let's jump right into it. First, I want to talk to my family buyers, right? So if you're married with a partner, you have kids involved, I want to talk to you guys first, and then I'll talk to the single people afterwards. But if you're married with kids, I'm going to assume that your tax return is going to be somewhere along the lines between $10,000 and $12,000. So let's just assume it's 12, right? So your return, 12,000, right? Now, you have saved in your savings account, obviously, right? I'm gonna say you have $2,000 saved. So saved in your bank account, $2,000. Now, let's say that you already got pre-qualified and or are considering pre-qualifying, but you did your preliminary research, and you found, using mortgage calculators and things like that, that $400,000 house is what you can afford. So 400,000 is the house you can afford, right? Now, here's the thing, right? You're worrying about what your down payment is going to be, what your closing costs are going to be. You're trying to factor all these things in, right? Closing costs are typically 5 to 6% of the purchase price. So 5 or 6% of the 400,000, right? Now this is assuming you actually bought a house or a condo or co-op, 400,000, right? Could be less. If you got pre-approved for that, obviously it's not going to be more because that's just what you got pre-approved for. So in this case, 400,000. That 6%, we're going to go with the higher number. So 6% of 400,000 is $25,000. Let me try to see what I can write it. All right, so 6% of this, 25,000. Can you see that? I hope so. 25,000. Now, obviously, you don't have enough, right? You have saved 2,000, 12,000 is your return. That's $14,000. But here's the kicker, right? So you can actually get what's called a gift. And a gift is, it could come from your mom, from your parents, grandparents, or whatever. A gift is them giving you this money in form of a gift. So for Christmas, for your birthday, whatever the case may be, right? They're giving you this money in form of a gift. Now that's allowed. You can do that, right? I mean, you have to get paperwork signed from them to give to the bank so that it's noted that it is a gift. But you'll cross that bridge when you get there. However, so let's say a parent or a grandparent gives you, what we got here? We're gonna do 10,000. 10,000, you got 12,000, that's 22, plus the 2 is 24. You got $24,000. You're still shy, what, $1,000, right? But the thing is, these mortgages or the mortgage industries, the banks have specific programs that can help you with your closing costs. And also keep in mind, this 12,000 is going towards this 25, right? The down payment that you put in is going towards this 25. So if we minus that, you got what? 1,400? I'm sorry, $14,000. $14,000 is what you have to. No, that's not right. No, that's wrong. I apologize. My math is wrong. It's $13,000. See, I'm human. I make mistakes. $13,000. $13,000 is what you have to come up to the closing tables with, right? Now, there's these programs that allow you or will give the bank the opportunity. Well, I don't want to say they give the bank. So the bank actually gives you assistance towards this closing cost. So essentially, you don't need the entire $13,000 to bring to the closing table, because the bank will help you given the your circumstances, or if they can or cannot, right? This is all depending on the bank. So they will help you with your closing costs. Now you see why it's pretty much it's kind of simple, and people kind of overcomplicate it on purchasing their first home. 12,000, you only need save to about $2,000. Now I'm giving you these as an examples, right? I mean, these numbers might be off a little bit, higher or lower. It's something that you really need to speak with the mortgage broker or the bank with that regard. However, this is what this is what it is. Essentially, your 12,000 plus this 2 is what you have saved. But I'm just trying to break it down to show you what your tax return looks like, plus what you have saved, then what you can get gifted in order to buy this $400,000 house. Hopefully that makes sense to you. Now I want to talk to my single buyers, right? So if you are by yourself, or if you have a girlfriend or a boyfriend and you guys are considering, buying a condo or a co-op, or maybe even a house, but you want to do it solely under your name, and you're the one who's putting the money up and paying for everything and stuff like that. If this is you, this is who I want to put on the board, right? As a single person, you don't really get much, right? So unless you have kids, but as a single person, you don't really get much in terms of your tax return. Let's assume your tax return is $2,000. Right, now this could be higher or lower depending on the person, but we're just gonna go with the $2,000 and save. Now you've been thinking about this for some time now, right? So you've been saving up some money, say a year or two or whatnot, and you got saved in your bank right now $5,000. In total, you have essentially $7,000 saved. Now, we're going to assume that you're living by yourself. You probably want a 1-bedroom, and maybe a co-op is something you're leaning to, right? So let's assume that the co-op now costs $180,000. Now remember, it's 5 to 6% of closing costs is what you have to come to the table with, right? So 6% of that is 10,800. If my math is right, yeah, 10,800. You can see the discrepancy, right? So you're kind of shy. You kind of shy some money, right? So, but you get gifted. Remember, you can get a gift, but you get gifted. What you at, 7? Let's say you get gifted $5,000 from a parent, right? Or parent and grandparents, right? So now you got your 10 plus the 2, you're at 12, you have more than enough. Again, same thing applies to you. There could be some programs, or there may be some programs from the bank or the mortgage broker that you use, which will assist you with your closing costs. So essentially, you may not need the entire $12,000, right? You can actually might be able to pocket some of that to, maybe let's say you wanted to update the appliances or something like that. Maybe that allow you to do that. But notice how with your tax return, some money you have saved and then a gift, it'll help you get that co-op that you want, you know, for, let's say, for, like I said, in this example, for $180,000. So again, you see that with using your tax return plus what you have saved, it's pretty simple to be able to buy your first place. Right now, let's assume you don't have the 5,000. Let's say you got 2,000. You got gifted a 5, that's 7, plus the other 2, you're at 9. You're shy 1,800. Same thing applies, right? There are programs out there that can help you with your closing costs, so you do not need to bring the entire amount with you. So the whole point of that was to really show you that using your tax return that you get could help you buy that place that you want. And, you know, don't use it on stuff that you don't need to be buying, right? Use this money as an investment for your future. Because remember, when you buy a place, you're essentially building wealth for your family that way. When you buy your first place, because, you know, when you buy a house, condo, co-op, you know, these real estate stuff are always appreciating. So when you go to sell it, you'll be able to sell it for more than what you actually bought it for. So keep that in mind, right? Hopefully this helped you. If it did, leave a comment below. Let me know what your thoughts were on that. And if you have any questions, my information is down below. So give me a call, shoot me an email. Follow me on my social media pages if you'd like to chat with me there. And yeah, I'll see you in the next one. Take care, guys.